Who knows, maybe we'll pay off our $35 trillion, hand them a little crypto check, right? We'll hand them a little Bitcoin and wipe out our $35 trillion.
But how do you... Asset management forecasted that crypto and AI could add a collective $20 trillion to the global economy by 2030.
You just speak to this, and this was benchmark analyst Mike Hickey. This is in the Journal. He was said, anytime a CFO exits, it creates uncertainty for investors. When a business is good and the CFO leaves, it's like, why now? Is there something we don't know?
Yeah, there really isn't. We're the strongest we've ever been, and Mike has got a lot of things he wants to do. So I would say that's an analyst interpretation. But once again, highlighting on some of the strength of the quarter, we're seeing a content explosion on the platform really right now. We've got over 20 experiences with more than a million daily active players, if you can believe it. I just saw your prior guest talking about FIFA and their sponsorship. FIFA's on Roblox as well right now. Their property has gotten over a 20% increase in 18 and up players over the last 90 days. Hey, and I wish I was there with you physically. We're doing a virtual event on our platform right now called The Games, where there's 50 Roblox properties and 15 influencers really mimicking virtually all of the awesome sports properties on our platform. So we've never been stronger, and it's really the biggest we've ever been in a record quarter.
This is the story of one of the most damaging insider trading rings of all time and the FBI and Department of Justice operation that tracked it down. Our documentary is called Putin's Traitor, and it reveals how hackers based in Moscow were able to access financial information for scores of American companies and trade on it illegally for years.
I think that Jay Powell wished his meeting was next week rather than this week. He certainly missed really bad data both on Thursday and on Friday. And I agree, he should have cut last time. And I do think that 4 cuts by the end of the year would be necessary, and maybe even more depending on certainly the evolution of data. The honeymoon is over. Let's put it that way. Jay Powell and Fed enjoyed this idea that, we can bring inflation down, no real consequences. We can wait and wait and wait. Well, I think he waited too long.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And also, guys, make sure you go follow and like the TikTok. And those who built me from the beginning or have the NWO book understood what Trump was saying. Give everybody a crypto check. Hand out Bitcoin and wipe out this $35 trillion. And how long have I been saying this, guys? We know the universal basic income is coming, and we know they're going to turn this $35 trillion from debt to equity. And remember, the Crypto Teacher told you. And crypto and AI could add $20 trillion by 2030 to the GDP. And guys, 2030 is not far out, and the pace the NWO is moving, this is definitely going to become true, because we know crypto and AI is about to take over this economy, and the sheep are going inside the metaverse. And we know Roblox is going to be leading the way, getting the millennials and Generation Z prepared for that digital world through gaming, and we know they're going to dangle that carrot. And guys, you can't make this stuff up. We know the big one is coming. Now CNBC is going to be doing a documentary on the Russian hackers. Guys, I'm an old man. I've seen this movie before. It's always the same boogeyman, and then we see this come into reality. Remember, your life is an illusion, and TV is your reality. And now, all of a sudden, guys, these financial channels have changed. The Fed has waited too late. And again, we've seen this movie before. We saw it during the C word. And we know what they said about inflation. We wouldn't get any inflation, but guys, if you print 80% of all money in existence in 2 years, what do you expect? And we know who controls the money printer. And these central banks have been moving in lockstep. You had the globe almost at 0% interest or negative interest rates for almost a decade because they had a plan. They knew they were going to be destroying the United States world reserve currency and move over to a tokenized digital economy. And Bitcoin was a perfect narrative. Technology that would get rid of the central banks and these big banks, but all along the big banks and the central banks were behind crypto from the beginning. Guys, you can't make this stuff up. And this is definitely biblical. I told you the 3 warning signs that the 4th Industrial Revolution is speeding up. We have the drums are beating in the Middle East. We have Japan finally raising interest rates. And the last one, of course, is China. Drums are beating. And this is going to be like Star Wars. And remember, the crypto teacher told you. Because he knows. When it comes to the NWO, it's all planned out. You have a wonderful day.
Do you think we've stayed too long? Is it too restrictive?
By saying it's restrictive, we're already suggesting that there really is a different real rate that the market would set, and that the Fed is deliberately keeping rates artificially high. So just let the market do it and stop with this. Well, one thing we know is when you distort the market so much by having a zero interest rate, you cause all kinds of malinvestment. You don't allow price signals to operate effectively, so you don't know how to have capital flow to its optimal use. And it's clear we needed to come up from that, and that does feed inflation. But I think I would have quit at 4.25%, 4.5%. That's where we were back in December of 2022, and then let the market sort it out. The Fed should be relying more on open market operations. And that would kill 2 birds with 1 stone, because they should be reducing their footprint in financial markets. They should be selling off part of the portfolio.
Making it advantageous for banks to act certain ways at the expense of entrepreneurs and innovators.
Well, what they do now, the Fed's main tool, unlike when Paul Volcker was the chairman, the Fed's main tool is a very perverse incentive. They are paying this high rate, 5.4%, to commercial banks to keep the money sitting there stagnant. This is like paying farmers not to grow crops or paying people not to work. It doesn't make sense.
We've done those things before, too.
Yeah, and I think it violates, it not only discourages entrepreneurial endeavor, but I just think that it's sort of you do interest rates by diktat instead of letting the organic forces in the economy, the people who are really there, they should decide the cost of capital, because we're seeing that Federal Reserve officials are not omniscient, and I think that panics the market a little bit.
We can't overinterpret 1 month of jobs data. So while the jobs data is down, the growth rate in the second quarter was almost 3%. So I think the question is this the beginning of a trend? Number 2, the question also is whether the Fed should have acted sooner to, if you will, reduce interest rates, understanding that the trend line for inflation was going down and the revised numbers last month were a bit lower. So I called last week when I was in New Orleans at the National Urban League Conference for Chair Powell to reduce these rates and signal, and here's where the power is, to signal to the markets and to Main Street that the Fed is going to begin reducing rates on a consistent basis. They have the power to stimulate this economy. The third point is, whenever we're in an election cycle, there's a sense of uncertainty, and people are being cautious because they don't know what the outcome may be or what the policies may be. So that's maybe an underlying factor in this. But the bottom line is, we have to interpret these numbers, but not over-interpret them, because it's 1 month, and we've seen months down before over the last 3 years, and then they bounce back in the next month. But the Fed has the power, and I'm concerned that they may have waited and been too cautious. They should have cut rates a little early.
What do you think, Sarah? Now you have the floor.
Thanks, Joe. I think this was a make or break number for the markets this week. Investors are already on edge because they're afraid that the Fed is not going to cut rates in time to avoid a recession. And this number only adds fuel to that fire. There's also two other factors that are making investors very nervous about the economy. That's underwhelming earnings and weak manufacturing data with ISM yesterday. But let's talk about a couple of unusual data points within this data that we might be more optimistic about. Now, first of all, wage inflation does look promising. Inflation is going in the right direction. Also, the unusual factor of Hurricane Beryl may have impacted this number and dragged it lower, which may mean that that is somewhat of a one-time data point. Also, I think what's important here for investors is rate cuts are coming, yields are plummeting. That cash that's been still sitting on the sidelines needs to think about moving back into the markets. And that's looking at fixed income, which should look very promising here with these rate cuts coming. You can lock in some yields here that are attractive. Investors need to think about where can they generate stronger returns now that the return on cash is going to continue to deteriorate.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Sonali Basak. Sonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason reason here that the system is kind of clogged up, if you will. During that auction that we saw a little bit before, the attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets. Now,
it was not just a poor auction. It was absolutely lousy. And you know, when the dealers have to step in to save a Treasury auction, that's a rare occurrence. And
Cryptoteacher and the New World Order book, plus the 3 Kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.